Investing in an IPO is much simpler than it seems. We'll answer all your queries in a minute in this video. What do you do when you need to build a house, but you're short of funds? You borrow from a bank, so you borrow money to grow. Similarly, when companies need to grow, they need to fund it on a large scale. This is done by offering investors a stake in the company in exchange for their money. IPO stands for Initial Public Offering. This is a process through which a private organization becomes public by releasing shares to the general public for the first time. A company raises capital through an IPO based on its objectives. A firm may want to expand its regional footprint, set up new manufacturing facilities, or simply to make itself publicly known. But do you think it is possible to do all this single-handedly? An IPO is executed with assistance from multiple investment banks over a period of 3 to 4 days. IPOs allow investors to enter a stock at attractive valuations before its value grows over time. Stay tuned as we explain how companies host IPOs. Private organizations go public through some simple steps. Step 1. The company files an application for registration with the Securities and Exchange Board of India, SEBI, the regulator for IPOs. Step 2. While SEBI scrutinizes all submitted documents, the company makes a red herring prospectus or DRHP, which provides potential investors with all details about the company, including its management. You must be wondering what happens now. Well, SEBI's approval means that the company is cleared to go public. Step 3. After SEBI's approval, the company determines the IPO size, number of shares to be issued, the distribution of shares, and the price band in which they will be issued. Step 4. When all details are firmed up, the company proceeds with the public issue of shares. In the 3 to 4 days of the issuing, investors can apply through their demat accounts or by contacting their stockbroker. Now comes one of the most crucial stages, that is, allotment of shares. Let's learn how that happens. Step 5. Depending on the number of applications by investors, the allotment of shares takes place based on the distribution decided by the company. Those who are not allotted shares are refunded their money. Step 6. The shares then get listed on the stock exchanges, that is, the BSE and the NSE, for public trading. Now that we know how an IPO is executed, it's time to learn what investors need to apply for an IPO. According to the latest rules, all investors must possess the following: demat account, trading account, bank account, mobile number linked with these accounts, operational UPI ID, and finally, we arrive at the part you're eagerly waiting for: how to apply for an IPO. The process of application is straightforward. You need to follow these steps to the word. Log into your trading app provided by the stockbroker and deposit funds from your bank account. Once you are done adding funds, navigate to the ongoing IPO section in the app. Here you will see all active IPOs in real time. Choose your investor type and the company whose IPO you wish to participate in. Feed in the number of shares you wish to apply for and the bidding amount, which is the amount you are willing to pay for the shares within the IPO price band. Enter your UPI ID and submit the application. You will now be redirected to your UPI app where you must log in and pay the bidding amount. The paid bidding amount remains locked in until the end of the IPO share allotment. Does this mean that your application is always accepted? The answer is no. But why? Your application can get rejected if you use a different bank account to make the payment instead of the one linked with your trading account. Moreover, the applicant must be the same as the person whose bank account is used in the application. The UPI payment verifies this during the application process. The public listing of shares depends on their demand and supply. Hence, IPO investors can also lose money if the shares are listed at a discount. That's all about the IPO process and how you can invest in one. We hope you invest in some really good ones.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.